That's back up and running now.
Brian,
I do a lot of stuff. Really do. But here for free, I only give away one strategy. So I'm not going to talk to you about cash secured puts. I'm not going to talk to you about the wheel strategy. I'll talk to you about covered calls because they're simple, they're safe, they're easy, and they're predictable. And if you do them right, there's no way to lose. If you do them right, if you pick the right company. Rhino, getting it now. I think they're gambling on it's going to go higher than the cost of the call option. Absolutely. You are 100% right. They're looking for the call option to increase. Thank you so much for the call. Yep. All right. Hate the loser. CRML. What the hell is that? CRML. Critical mental. All right, I have a minor issue with this one. Who came up with this one? Hate the loser. I like your strategy. Thanks, Brian. Thank you. Okay. Hate the loser. You ready for this? CRML. 15, 20. I'm going to say no. Now the reason I'm saying no is because last year this stock was around $1. How can that thing have two decades? Now, 2 decades, not 2 weeks, not 2 months, it's not 2 quarters, it's not 2 years, it's 2 decades. 10, 20 years. 2 decades of increased profits. I honestly don't care about this. Really, I don't. I'm 62. I retired a couple of years ago. I don't have the luxury of making mistakes. Buying a company just because it jumps up has no historical performance. It has no predictability. It has not consistently done the exact same thing for 2 decades. Okay, when you get to my age, you can change your rules any way you want. I'm just telling you what my rules are for me. If you like it, great. You do it. I ain't doing it because it's too risky for me. I have no desire to say good afternoon. Welcome to Walmart. Will that be paper or plastic? Can I help you with that? Let me help you load that, sir. No. I don't. I have nothing against the people that do that. Wonderful. Awesome. My first job was in 1973. Okay, that's over five decades, a half a century of working. I think I've earned the right to not have to work anymore. I think I've earned the right to not have to work anymore. If I can financially afford it on my own without any handout from anyone. Okay, so let's see what else do we have? Hate the loser. ABAT. Okay. I'm going to say hell no to this one too. This was less than $1 a year ago also. Okay, it was $1. It jumps up to 11. Now it's back down to $5. I don't do those. I only stick with companies that are consistently profitable year after year. Consistent profits. 2 decades. That's 20 years. All right. So what do we have for questions down here? Carmel, no. Three losers in a row. CRML, no. ABAT, hell no. SIDU, hell no. When I say 2 decades of profits and weekly options, that's what I mean. Dilf's Day. Kevin, what is that? Robert, I have 5,000 capital. I can't do a covered call. Actually, you can. Okay, you can do covered calls all the way down to $1. There are companies out there for $1 that you can do covered calls on. Sam's Prince Shaw, KMI, Kinder Morgan. Yep. SLB, Schlumberger. Yep. EQT, never heard of it. EQT Corporation. Interesting. Now I got a little bit of a problem with this one, Samson. Here's my problem. You ready? 30 days ago, we're at 54.50. We dropped down to 49. We shoot back up to 55. Now 49.50 to 55 is close to $5.50 on a $50 stock. That's 10%. Samson, do you see that? From here to here is over 10%. I don't buy in something at 10%. If you really like it, wait for this profit to take place and jump in around here. If you like it. Because stocks go from a 30-day high to a 30-day bottom. They turn around and go back up again. That's all they do. They go up, they go down, that's all. Okay, so no to EQB, EQT, Schlumberger, SLB. SLB Limited. That's not Schlumberger. SLB Limited. This is going to be a hit. Yeah, it is Schlumberger. Okay. No. I don't buy at the high of the year. See that? I don't buy at the high. It just doesn't make sense. That's a time to sell, not a time to buy. KMI, Kinder Morgan. This is going to be another no. Okay. 30-day bottom, shoots up, pulls back, shoots up, 30-day high. I don't buy anything at the high, Samson. Okay, Eric, we already did Marvel. How do I like Macy's? We did Macy's like 5. We did Macy's last night. Hold on. As much as I like Macy's, I'd put it off for a little bit only because here's the top. Now she's pulling back. Zoom into that. Better look. Okay. 30-day high. She drops back down. Yesterday was a 30-day bottom. Today, one day up. Which means by Monday, Macy's may be perfect. Now the reason I say that is yesterday was a 30-day bottom. Today, one day the upside. Tomorrow, which is Thursday, that would be 2 days the upside. And then Friday could be 3 days. That would be the opportunity to jump in on Fridays. But I usually don't buy anything on Fridays. I usually buy on Mondays. So I'm putting Macy's on the list for first thing Monday. So let's just take a look at it. 21. Why not? The 21s. Macy's covered call. 21. There it is. Just one contract. Okay. At the market. Here we go. Are you ready? Buy one covered call Macy's. 23 January. Whoa. Get a good money. Is it 1% per stock? It's 1% for the total holdings in my account. Okay, Nettie. If I have $100,000 in my account, I want 1% every single week. That's $1,000 a week. So $100,000, I want $1,000 a week. If it's $50,000, I want $500 a week. Whatever my account is, I want 1% of that every single week. All right. So Macy's. You want to change it from this Friday to next Friday. That would be the 30 January. There we go. Confirm. Send. There it is. All right. Buy one covered call Macy's. 30 January. Next Friday. The 21 call option. 57 is the profit. 2,000 is the investment. So what's the rate of return there? Well, calculator. $57 is the profit. The investment is $2,043. Grand total of 2.7%. 2.7% for 1 week. Do you like it? Yes, no question. Either you like Macy's or you don't. It's pretty simple. Let's see what we got. Come on. 2.7%. There it is right there. Buy a warrant covered call Macy's. 30 January. The 21 call option. 57 is the profit. The investment, 2,000. It's a rate of return of 2.7% for 1 week. Think about it. Does that make sense? That's the first question. Does that make sense? Gennard, what type of option? Call option. Okay. 2.7. Whoops. 2.7. Yay! All right. Adventure Guy, how are you today? All right. What type of call? It's a call option. Obiz, net, yes, okay. Yaris, what is that? I have no idea what that means. Gennard, Procter & Gamble. Love me some Procter & Gamble. They've been in business for over 100 years. Why the hell not? Think about it. Why the hell Procter & Gamble. Procter & Gamble. I'm going to say no this week for Procter & Gamble. Now, we've been doing Procter & Gamble since it hit the bottom. This is the bottom of the year. Okay? 137. Goes from 137 to 147. That's $10. Of course it's going to be profit taking, which started today. See that? Now it's dropping. So I like Procter & Gamble, but I'd give it 2 weeks. So I'm going to write Procter & Gamble 2 weeks from today. And we'll look at Procter & Gamble later. Aaron. Is that American Airlines? AAL? That looks interesting. The high, low, where was it? Where is it? Down, up. 15. The 15 to go for 28. I say yeah. I like that one. Can you do realty income? Sean, we already did realty income. Was already a no. Uh-oh. Hold on. All right. Vino, I have to drop. Thanks again for the lesson. I really do appreciate it. We'll schedule a call soon. Alrighty. Let's do this. Gonna sit comfortable. Hey, Brian. You sell covered calls and coverage wheel strategy or stick to just calls for simplicity. Very nice, that one. You a friend of Bill's, cousin Asher. Which bill are we talking about? I got a lot of bills in my life. Pumpkin and pie. Pumpkin and pie. Okay. Are you still selling covered calls? I have Netflix getting killed. Well, that's your own damn fault. I'm terribly sorry. It is. Okay, Netflix is not profitable. They don't have dividends. Without dividends, okay, they're not sharing their profits. It's strictly a growth stock. So you have to deal with the consequences of growth stocks. They take all the profits and put it back into the company for future growth. Okay, so you're going to grin and deal with it. Okay, the stock goes up. All right, fine. You sell for profit on the stock comes down. It's called buying the dip. As it dips down, you buy more. It's called dollar cost averaging, and you keep buying. That's basically the only thing you can do with an income stock. It's not an income stock. It's a growth stock. Covered calls. Here we are. So a year ago, we had the top at 1915. We bottomed out in April at 835. That's almost a 50% decrease from 19 to 18. That is a 50% decrease. Wow. Okay. So now we're here at 1061. We pulled back. Now we're getting ready to turn around. That looks like a great bounce.
Look at it. 30-day high. Here's the bottom. Now it's going up.
So what's the 15 looking like? Well, let's find out. American Airlines, the 15s. Okay, the covered stock. The 15s. One contract. The market, there we go. And it is right there by one covered call, American Airlines. The 23rd of January. Wait a minute. No, I don't want the 23rd of January. I want next. This is why you're supposed to read it out loud. Because I hit the wrong button. Okay. You read it out loud to make sure you do the right one. We want the 30th of January, which is next week. That looks better. The profit's 49. The investment is 1,400. Okay. Let's check the rate of return. 49 bucks divided by the investment. 1,451. Well, it's a grand total of 3.3. I'm going to write this one down, 3.3%. If you like American Airlines. I like 3.3%. I like 3.3% for 1 week. Aaron, that was a good one, Aaron. There it is right there. By one covered call, American Airlines, 30 January. That's next Friday. The 15 call option. The profit, 49. The investment, 14. That's a 3.3% return for 1 week. I'm going to put this one right there. 3.3. Yay! Yay! All right, 3.3. Sean, O Realty. We're not going to do O Realty. It's just a no. All right, what else do we got? What do we have down here? Don't. Thank you for the free info. I have the desire, said the other day, but what's this first step? First step is number 1. Do you have the desire to do it? Change your line of thinking, all that kind of nice, neat, fun stuff. Step 2 is find the stocks that you like. Okay, find the stocks that you like. Dividend Kings, 5 decades of increased profits. Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years of increased profits. The rules are a little bit different between the champions and the aristocrats, but it's still a quarter of a century of increased profits year after year after year. List number 4, the dividend contenders, 10 to 24 years of increased profits. Then anything on Warren Buffett's list we'll take a gander at. So you have to decide what companies you like and which ones you're willing to hold on to. Never buy something you're not willing to hold on to. Okay, make sure the profits increase, because in a worst case scenario, if the stock drops and drops and drops, at least the dividend will consistently increase. You cannot be a dividend king unless you have 5 decades of increased profits. So even as the stocks are coming down, the profits, the dividends are consistently increasing. That's the difference between a dividend paying stock, the 4 lists I told you about, and all the other ones. Are they consistently profitable? It's a yes or a no. Out of 10,800 and it was 18, 19 different companies, only about 300 fit the bill. That's it. Next. Like what software? Okay, the software that I'm using is Thinkorswim. It's offered through Charles Schwab. Now they'll let you use it for a bit. Silence. Try Charles Schwab. Paper trade. Yep, as I tell everyone. So you just pick a normie platform like Schwab or Vanguard or something, and then follow the plan? Basically, yes. Because they're all basically doing the exact same thing. You're buying the stock, you're selling the option. You can do that anywhere. You can even do that at your bank. You tell your banker, yo, buy me some Schwab, sell some covered calls against it. Okay, pretty simple. Yep, all right. Thank you, friend. Now we don't need to take his time. Actually, you kind of do, because there are a few little tiny details you might not catch on to. Mr. James, we appreciate sincerely. Thank you. All right, up, down. Thank you for your time. Will you please check my understanding from watching for the last 2 days? Pick the stocks that have proven profitability for 20 years so you can be reliable. Absolutely. That's right. Yes, that's one. Predict it will continue to follow the up-down pattern. Well, you don't really need to predict it. You just look at it. The chart will tell you exactly what it's doing. It's not guesswork. It's not shot in the dark. All right, we'll get rid of this. Okay. Even a 5-year-old, my 5-year-old grandson will tell you exactly what it's doing. It went up. It went down. It went up. It went down. It went up. It went down. Now it's going up again. That's pretty easy to see. We can do that with almost any company. AT&T. Same thing. It went up. It went down. It went up. It went down. It went up, down. That's all they do. They go up, they go down. The idea is to look. What is it doing now? Well, it was high, dropped here, went up, went down. Now it's going up again. How far up is it going to go? We don't know. That's why you need. Now, you pick up your own rules. For me, it's 2 days. Okay. Yesterday was the bottom. Today is one day to the upside. So today's one day up. I want 2 days up, and then on the third day up. That's what I will jump. That's my rule for me. Okay, you got to pick out what your rule is for you. Two, buy a down, and then sell the up. I'm not quite sure what that means. But when the stock drops, then it goes up 3 days. That's where I want to buy. Because I want it to bounce off the bottom, then go up before I jump in. The numbers need to meet 5 criteria to make the 1%. That's correct. Not necessarily. Thank you, up, down. That's correct. Not necessarily. Maybe I need to go understand the covered call better. Yep. Patience is a virtue. Keep coming. Descent from the option premium for the week. Absolutely. I believe I'm following. Call options is better. The price will go up, and I need. Prove I'm human. Prove I'm human. Meat popsicle. All right. Call options is better. The price will go up, and I need to make sure in the end at least the fees, our eyes are at least 1%. Yep. Remember, you're not buying options. You are selling options on the underlying stock that you buy. Okay. He's kind of explaining the call right now. What you said. Yes. For instance, purchase 100 shares of a desirable stock, then sell at the money, call option, and receive the premium for that week. That's right, dude. Right. I already own a stock that I bought on the normal market. Then I go through the puts and call section of the market and sell a contract to people to have the right to buy my stock from me at a given price by a certain date. It's a certain price by a certain date. So we like to pick the price at basically what we bought the stock at. For instance, AT&T, 23.50. If I buy the stock at 23.50, what it's at now, I want to sell it at 23.50, and I want to get 1%. Okay, and it's a weekly. So if I'm buying it tomorrow, I want to sell next Friday. And then next Friday, if it's above 23.50 back, and then I do a different company the following week. What else do we have here? Weeknight bites. Simone is in the house. Dylan. We already looked at Marvell earlier. Life's a beach. OCG. What is OCG? OCG. Oriental Culture Holding. Hell no. No. Sorry. Who came up with that one? Life's a beach. Yeah. No dividend. No options. No thank you. Simple. No options. No thank you. Miss Tony, how are you today? Risk taker. Eric. Nice. To New York City. 99. Riley. Good evening. Risk taker official. Okay, thank you. Laurie, good evening. Built from the ashes. Alrighty. Kanishinu. That's almost half. Yeah, 50% is almost half. Son of Prince Budget. Franklin. SMR. How do you think I feel? All right. So the high, the low, where is it? Look at this. Down, up. What's happening now? 1975. The 20s are going for 55. That's more than 2%. And that's the 23. That's this week. All right. Well, let's take a gander. Who came up with this one? SMR. Franklin. Okay, the last 30 days. Here's your top. Here's your bottom. She drops, finds the 30-day bottom, shoots up. There's the 30-day top, drops down. Now she's going sideways. But look at this. Sideways with a slight tilt to the upside. So let's take a look at the 20s. Okay, covered calls. 20s. At the market, there we go. And here's Johnny. By one, covered call, SMR. 20 January. That's this coming Friday. That's only 2 days away. The $20 call option. Well, $36 is the profit. 1964. The investment. 1964. Grand total of 1.8% for 2 days. 1.8% for 2 days. Franklin. 1.8%. Now I do own some SMR at 40, so I probably most likely do some dollar cost average on this thing, considering it's not to bounce off that bottom again. Here it is right here. By one call, SMR. 23 January. That's this coming Friday. The $20 call option. $36 the profit. The investment, 1964. 1.8% for 2 days. If you like SMR. $1.8. Gotta love it. 1.8. What do we have now? All right, let's get rid of this. Let's get rid of that. Let's get rid of that. Let's go back over to here. Let's get rid of that. And let's do this. What do we have now? Market, sell, contract. People got the right. Okay. If the stock is at that, blah blah. And our car side. Okay, it's all backwards. Is this all about covered calls? Elseway, yes it is. It's simple, it's safe, it's predictable. Like this guy, honor is a fading trait. Thank you. Didn't know that about Think or Swim. I could enter a trade info in the night. Yes, you can. I used to do all my trades the night before or the morning before. Because see, I used to have a 9-to-5 job. Okay, I didn't do this every day. Well, yeah, I've been doing this every day. But when I worked, I couldn't do it at 9 in the morning because I had to do it before I went to work. So yeah, you can do your trades as soon as you wake up or before you go to bed. Take a look at the stocks you like, and it's always the same rules. Never buy something you do not want to own long term. That's number one. Number two, never sell at a loss. It defeats the purpose of the game. Yes, it is a game. It's an adult game. And yes, you can lose your money if you do stupid crap. Okay? Never sell at a loss. Rule 3. Make sure the company is consistently profitable. It boggles my mind why some people want to put money into a company. I understand it. I do. Because you have those stocks that they're talking about in the news. Buy this, by the numbers telling you. Because the numbers do not lie. If the company is working at a profit and it's been profitable for at least 2 decades, great. You can't hide that. You can't fake that. But new companies, no, thank you. Okay. I'm at that point in my life where I want to be safe and I want predictable income. All right. Silence. My personal experience is that a lot of my family and friends are moving to T-Mobile. This is PNW. I have no idea what PNW means. Up, down. If you're still here, brother, can you remind me what we're looking for in the stock beyond 20 years profitability? Weekly options. That's it. Okay. Silence and violence. The only thing I'm looking for. Just two. Consistency, profitability. That's 20 years of profits. Two. Weekly options. That's it. Then you jump in at the right time and make sure the numbers work. We like it. It's a buffet. King, champion. Yep. When should I sell Misty? The day you bought it. I don't like Misty. Now, the reason I don't like Misty is they're not consistently profitable. The profits go up, the profits go down. It's up, down. It's not consistent whatsoever. It's a game for people who want to play long term and they don't mind the fluctuation of the profitability. If you want consistency and profitability, you need something that it's very complicated to try to understand through this chat, but I'll try. Okay. Preferably, you want profitable companies that are proven. Yep. I appreciate your good faith effort, and then I will try to research from your terms from here. Thank you. You want companies that have weekly options. That's right. You want. Okay. You guys talk amongst yourself. I owe you something to drink. Hold tight. I have to get something to drink. All right. Sorry about that. I need something with honey in it. All right. Stocks that have been down and around, turning around, blah, 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 blah. Okay. All right, that makes sense. Real goal, blah, blah, blah. All right. I really don't need to be part of this conversation. All right. Jack. Charlie. Hold up. You have an earring? What's wrong with an earring? I've had an earring since since 1981. Charlie. AbbVie. A-B-B-B. Let's check it out. A-B-B-B. Ooh, nice, Charlie. Check this one out. Change of the weather. Premium covers the difference. SMR. How does it look? We already did that one. Ryder. Colin. You got to give me a Schlumberger like Schlumberger. Yep, got that one. Netflix. Yep. Jay Collins, right? You got to give me the ticker symbol. One leg duck. QQQM. I'm going to say no. Now, the reason I'm saying no to the QQQMs, check the profitability. How consistently profitable have they been? Can you recap top three you would consider? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. Ryan York. Thank you for your time. See you next time. All right. That man is styling. Thank you, Robo. Monica! Why would you buy way out of the money? Monica, I am totally lost. Nowhere have I ever said about buying way out of the money. Okay, Monica, I buy the stock. I sell the option. I don't buy the option. I sell the option. All right, Charlie, we're taking a look at AbbVie. Let's take a gander. High, low. Where was it? Where is it? Up, down, up. It's changing directions right here as we speak. So let's take a look at this. Last 90 days. 90 day top, 90 day bottom. Down, up, down. What do you think is going next? Come on, you all should know this one. The 30 day top. Let's go to the 30 days. Okay. 30 days. Check it out. Down. Where do you think it's going next? The 216s, the 215s go for 224. That's for this week. Let's take a look at next week. Let's get rid of 23 January. Take a look at 30 January. All right. The 25, the 215, the 285. The 217, 222. I'm ready to do the 217s. Because look at where she is. 30 day tops here. At 236. She pulled back here. 210. Now she's going up. Now I wouldn't do this quite yet. I would wait until Friday. See what happens on Thursday. And if Friday's the third day up, maybe on Friday. What's number this one? AbbVie. I like AbbVie. A-B-B-V. So let's take a look at the numbers. Okay, let's get rid of this. Gonna move my chair out of the way. All right, let's take a gander. All right. Don't change it to covered calls. There it is. The 217. There it is. All right. One contract just to make it easy for you guys at the market. Here we go. You ready? Buy one. Covered call AbbVie. 30 January 26th. That means the option's going to expire next Friday. ABBV 217.50. That's the call option. 217.50. That's the date. The 30th of January. Okay, maximum profit, $3.95. What is it costing me? What's my investment risk? What's skin in the game? What do I have on the table? Well, that's $21,355. Grand total of 1.8% for 1 week. 1.8. We'll save that one. 1.8. We're going to zoom in a little so you guys get a better look. Where is it? There it is. By one covered call, AbbVie. 30 January. That's next Friday. The 117.50 call option. $3.95 is the profit. $21,000 is the investment. 1.8% for 1 week. So you get questions rattling around and beyond. Okay, up here, Neil Bean, up here. Okay, the questions. Number one, does it make sense? This company at this current price. Number four, am I willing to do a covered call to gain some weekly cash flow every single week? Okay, there's simple questions. They're really not difficult. Do I like this company? Does it make sense? Do I want to do this? A lot of people don't want to do it. There's nothing wrong with that. Let's save this one. 1.8. Let's go. All right. What do we have now? See, Monica, you didn't change the answer. You didn't ask me a different question. Why would you buy way out of the money? Okay, I'm not buying options, Monica. What else do we have? Camp Road. If a call option is in the money today and the contract expires this Friday, should I sell tomorrow or wait until contract expires? Camp Road, that's an excellent question. But here's the thing. You need to go through the whole bunch of questions. Number one, what did you buy the stock for? Number two, what option did you sell against it? Number three, where is it right now? Number four, am I at risk or am I in profit? Number five, what should I do next? It's not that difficult of questions. They're relatively easy questions. Motley Crue, TSYY. What the hell is that? Give me a second. We're getting there. TSYY. I'm going to say hell no, brother. Okay. Motley Crue. Okay. Motley Crue. Okay. TSYY. Okay. It's $4.95. It's a monthly. And this baby's dropping like a rock. I don't do monthlies. The numbers just don't work for me. Riley. TSLL. Which I do have some of those. Okay. TSLL. The top, the bottom, where is it? Down, up. What do you think is going next? It should be going up next. Let's zoom on in. What do you think? Here's a 30-day high. Here's your 30-day bottom. Yesterday. Today one day the upside, which means tomorrow could be 2 days. Friday could be 3 days to the upside. That's where I want to jump in. I'm going to write that one down for Monday also. But let's check out the numbers. Why the hell not, right? It's there in front of us. Now, Motley Crue, I cannot tell you whether or not to buy more TSYY. Couple of reasons. Reason number one, I know absolutely nothing about you. That's number one. Number two, I have no idea what you're trying to gain. Okay? I have no idea what your risk factors are. I can't in good conscience give you any advice. Okay? Either go to the website, book a call, or just leave your phone number here and I'll give you a buzz. Okay? So TSLL, which is what I do have. 30 January. Let's take a gander. 30 January. 1756. Let's do the 1750s. There it is. One contract at the market. Okay. Here we go. You ready? By one covered call TSLL 30 January. That's next Friday. 1750 call option. 9850 is the profit. 1652 is the investment. So what kind of rate of return is that? So let's figure it out. Profit 9850 divided by the investment 1652 gives me a grand total of 5. Yeah, you heard it. 5.9% for 1 week. If and only if you like TSLL. That's it. Do you like it or not? Monica, what are the rules between weekly call options and monthly call options? Ready, Monica? Here it is. I like weekly call options. I do not do monthly call options. It just does not work for me. The way I look at it, Monica, is if I'm getting 1 to 2% from each option contract, which is what my goal is. Okay, monthly. That's 12 times a year. 12 to 24% rate of return by the end of the year. That's pretty good. If that's what you're looking for. However, weekly options, 1 to 2% every week is 50 to 100% per year. So I'm not 100% sure if I really need to explain that to you. Okay, weekly. 50 to 100 flow to live comfortably. If you have enough money to make enough money by doing just monthly options, you do the monthly. Whatever works for you. I'm letting you know right now. I don't have enough money, so I have to do the weeklies. I have to get that 1% a week to live comfortably. And I do live comfortably. And I'm very appreciative for those weekly options. Mirza, is it true that the hardest thing about your job is even with all the knowledge that you may have, you still can lose a lot of everything? Do you agree? Okay, Mirza. No, I don't agree. Now the reason why I don't agree. Are you ready for this? The reason I don't agree. Number one, don't buy anything you don't want to hold on to. And those are companies that consistently increase their profits. So if I buy Coca-Cola has been in business for 140 some odd years. 140 years. They have over 5 decades. 5 decades. That's 10, 20, 30, 40, 50 years of continuously being profitable, higher profits. Now you cannot be a dividend king if your profits slip even one quarter. If your profits slip one quarter and you do not increase, you get tossed off of that list. So if you buy Coca-Cola, that's at $80, and it drops down to 40, and you decide to sell. Guess what? You made the conscious decision to sell for less than you paid for it. It is a conscious decision that makes you lose money. Because once you buy something, it is yours to do with whatever you please. Just because the value of the stock drops, you still have the right to collect that dividend that consistently increases every 90 days. You only lose money when you consciously agree to sell it for less than what you paid for it. Does that make sense? So if I buy something and I never sell it for a loss, I don't lose. Even if the value of the stock drops, I don't lose. Because here's the funny thing about that. Did we do this one already?
5.9. I don't think we did.
Okay. So no matter what happens, you are in 100% control, and you are 100% responsible for whatever you buy and whatever you sell. So if you buy TSLL tomorrow morning at 17.50, whatever the hell it was, and you sell it for 15.50, that's your own damn fault. That is losing money because you agreed to sell it for less than you paid for it. When I say rule one, never buy something you do not want to hold long term. Good, bad, ugly, indifferent, it doesn't matter. Stocks do two things and only two things. They go up, they go down. They go up, they go down. Yes, everything you bought is going to go down. Everything you bought is going to go up. That's all they do. They go up, they go down. Where you get in, where you get out. Okay, when you jump on that roller coaster, they go up, they go down, they go up, they go down, they go up, they go down. Wherever you jump on and wherever you jump off is 100% controlled by you. If you buy it at $100 and you sell it for less than $100, you paid for it. Rule one, never buy anything you do not want to hold on to. Good, bad, ugly. Goes up, goes down, don't care. Let's get rid of this. Wait a second. One covered call, TSLL, 30 January, it's next week, 17.50. 98.50 is the profit, 1,600 is the investment. That is a 5.9% return for 1 week. Sit tight. Sit tight. I haven't finished with you yet. Have not finished with you. 5.9. So remember that. You are 100% in control of whatever you buy, whatever you sell. Okay, stocks go up, stocks go down. That's all they do. They do not come to your house and tuck you in at night. They don't make the bed and put those little candies on your pillows. What the hell just happened? I guess it's telling me it's time to go home. It's midnight. I'm going to turn into a pumpkin. Hopefully I answered that question. All right, my chair. Let's answer up some of these questions and I'm going to call it a day. Ooh, what are the rules between, we already did one. We're working on Tesla. Cassis, I don't do Tesla. Okay, it has no dividends. So no, I don't do it. Anthony, what's happening, Anthony? All right, Michelle, how are you tonight? Tyrant, do you have trouble on weekly options being lower volume and if being... Okay, Tyrant, if you only pick good quality companies, you should never have a problem with volume. Cassis, what is the last company? Peter, I like bull put spreads. Well, Peter, so do I. I'm just not going to show them to you because I give away one strategy for free. James, what platform are you using? Son of Prince, that is Think or Swim, offered through Charles Schwab. Yeah, Luke, we sent out the Discord link this morning in the chat. You should have gotten it. Okay, this morning group. I think it was. I forget who it was, but someone did put the link in the chat this morning. All right, thank you, Cassis. You're welcome. Fit Black Woman, thank you. You can too. Patreon 115. I have no idea what that means. You can too. All right. Now Patreon. I told you earlier. I have 8 screens in front of me. So if you throw something up on the screen, you got to make it a complete thought. Beginning, middle, and end. If it's a question, make it into a question. You can too is basically a statement, and I don't know how to respond to that. Thoughts on IPO, BTGO. I don't do IPOs at all. 2 decades of consistent profits, Wesley. That means the company's got to be at least 20 years old. IPO is not 20 years old. No. Franklin, just too high. Thank you. All right, Franklin. Wesley, thoughts on no, I don't do IPO. Sorry. Hey, the real Torres. Look at PICS. What the hell is PICS? Okay. PICS. Let's try it again. PICS. Dude, can't find that symbol. That's a no. Then they'll get your 100 shares. Jeremy, I have no idea what you're talking about. Okay. Then they'll get 100 shares. You need to when you ask me a question. Ask the complete question. That's a statement. Then they'll get your 100 shares. Okay, that doesn't make any sense to me. Thank you, Monica. Who taught you this type of trade? Monica, this is something I had to create specifically for my 9-year-old. So Monica, 2008, my 9-year-old daughter said to me, "Daddy, what are you doing? Can you teach me?" So I had to create a trading strategy specifically for a 9-year-old little girl. Simple, safe, predictable, consistent, and no way for her to lose. Complexity only fills the ego. That's it. You want your ego to be filled? Fine. Find a very complex trading strategy. Then you'll feel really smart. Good for you. Simple, safe, predictable, consistent, no way to lose. For the 9-year-old. Buy a good quality company, sell it to someone for the same price you just paid for it, capture that premium if it's over 1%, and move on to the next one. It's very simple. All right. Show the full process of selling the call, please. Thank you. Can't argue. We already did that. Okay, I've actually done it 6 times tonight. Oh, the real Torres worth $5 billion. I honestly don't care. Okay? Torres. I honestly don't care about an IPO. I honestly don't. See, I tell you I'm not interested yet. You give me information thinking that I'll change my mind. I'm not going to. I've been doing this for a very long time. I honestly don't care about IPOs. I don't. Wesley. Jonard, this never expires. Selling covered call options. No. All options expire. They all do. All options expire. What we do is we roll it into the next week. Roll it into the next week. Roll it into the next week. Keep going. Spider-Man! Options expire the week you bought it for. Not necessarily so. We don't buy, we sell. Franklin. Yes, but you have to do it again and again. Yeah, I know. Boring as hell. You have to do it over and over again. Think of it this way, Franklin. Okay? If you got a cat or a dog, You got to take it for a walk every day. You got to feed it every day. You got to clean up after it every day. That's it. Okay, something you have to do every day. You got to shower every day. You got to do your hair every day. You got to do certain things every day. So why not take care of your money every day? D-loop. What if it drops and you end up under the trade? Do you just hold and sell again? Absolutely. Say D-loop. Rule 1. Never buy something you're not willing to hold on to. Thanks. So in case you don't lose money, you still own the stock. Well, that's why you're buying it in the first place. You buy the stock because you want to own it. You want to collect that dividend. This is just an added bonus. Monica, how do you roll it? Monica, you're relatively new. Rolling is a little bit more complex. Why don't you get the simple stuff done first? What else do we got? Son of Prince, James, what other platforms are you still using? I'm only doing Thinkorswim and Robinhood. That's it. Okay, Max Luther, SPY, no thank you. ODTE, no thank you. Full port, no thank you. Okay, I like things simple. I don't know why it is adults have a tendency to want to complicate things. It's created for a 9-year-old. Why do you want to make it complicated? What do we have down here? Charlie, thank you. Roger. Looking into this strategy, but looking at selling puts too, can easily make 1% a week on that if assigned sell call close the money wheel strategy. Yeah, Roger, you're absolutely 100% correct. The wheel strategy is a great strategy. It really is. I'm agreeing with you, Roger. 100%. But I didn't teach my 9-year-old the wheel strategy. I only taught her dividend capturing covered calls because it's simple, it's easy, and it's safe. Hey man, what about SYF? What is SYF? SYF. Synchrony Financial. Hell no. I don't do monthlies. What do you think about silver? Tim, silver should hit 300 sometime in the near future. It's supposed to hit like 340, 360, but let's just say 300 for the fun of it. What do I think? We already just said that one. We already did that. AAP, really? Advanced Auto Parts? Yeah. What's wrong with Advanced Auto Parts? On every major city. So who said that one? Green Dean. Do you remember when I said rule number 1? Never buy something you do not want to own. If you don't want to own Advanced Auto Parts, don't buy it. That's pretty simple. For God we love Johnson & Johnson, J&J. Now I'm going to say no to Johnson & Johnson for this week only because the high of the year was 2 days ago. Okay? 2 days ago, the high of the year. Yesterday it came down. Today it came down even further. You really like Johnson & Johnson. Keep your eye on it. 3, 4, 5 days from now, probably hit the bottom and then turn around. That's the time to jump in when she turns around, not as she's dropping. Cactus Nova. What is the secret to success? That's easy. You ready? Work hard. Live right. Find something you believe in. That's it. The secret to success. Work hard. Live right. Find something you believe in. Good night, Dev. Nice seeing you. What else we have? Ashley, thank you. Lou. What's happening, Lou? Penn Gayette. How are you doing? Jared, profit investment. Okay. And that Verizon contract is in the money. Okay, D-Loop, we did both of them. Both of them are very similar, and both of them were at the money. In the money. We love New York. Yay! That's the 9-1. All right, P291. Eros. E-R-A-S. What is that? E-R-A-S. Let's put it here. E-R-A-S. Aras Inc. Hell no. Running gold. Bank of America. Well, Bank of America looks promising. Okay, running gold. Now, the reason it looks promising, check this out.
Here's the top. Here's the bottom.
Oh, this side.
Here's the top. Here's the bottom.
Here's where it was. Here's where it is. Look at what it's doing.
Big drop down. Shoots up. Pulls back.
She's going up in a big gap right there. Let's zoom into that.
Gaps
have a tendency to fill.
Do you know what that means?
That gap. That means this baby's going to shoot up and fill that space. Is it going to happen this week? Is it going to happen next week? We don't know. But it's going to happen. Always does. El Yavani. Any opinion on SOX? I actually have some of that. Open door. Thank you. SOSX. What do you think?
The new bottom right there.
I got some of these at like $3. Now it's down to $2. Yeah, I'm feeling uncomfortable about it, but I do have some of them. What else do we have? All right. Was the Verizon contract and the money? No, D-Loop. The Verizon contract and the AT&T contract, they were both almost the exact same. They were at the money. Okay, this is recorded, so you can go back and watch it over again. D-Loop, can you explain how you got 9%? Was it the strike price above it? Okay, D-Loop, you're thinking of something else. Because Verizon did not give 9%, AT&T did not give 9%. Adriano, how successful are your students in making 1% a week? Well, some of them are very good at it. Interesting thing about my students and Adriano is because I teach them with the understanding that as soon as they learn everything, they'll go off on their merry way. Most of them do. Most of them come learn as much as they can learn, and then they go off and they learn something else. Whether they continue to do it, that's a them thing. Okay, once you learn something, once you know how to do it, it's up to you to continue to do it. Okay. Just because you can make 1% every single week, are you going to? Because you actually have to do something. The Vigilante XLE looks like it's about to break out of a long consolidation range. Would you look at it? XLE. What the hell is that? XLE. State Street Energy. I have no idea what the hell you're talking about, brother. None whatsoever. Hold on. Now you said looks like it's about to break out of a long consolidation range. Dude, it's at the high of the year. That's not a consolidation range. That's the high of the year. And I don't want to hold on to. Do not buy a stock if you don't understand it. Notice SoFi. Schwaz 8. No, I don't do SoFi. Look at the numbers. Seriously, go to a financial website and check how do the dividends look for SoFi over the last 20 years. And then you tell me whether or not you want to buy it. Okay, so Remax. Number one. Never. I'm going to say it slow so you can understand what I'm saying. Rule number one. Never buy something you're not willing to hold on to long term. Okay? Never buy something you do not understand. Okay? If you don't like Riot, don't buy it. If you think the stock is going to drop and you might feel uncomfortable about that, don't buy it. If you bought something and it goes down, well, it went down. What did you think was going to happen? One of two things. And guess what? I can guarantee you every single stock you buy is going to go up. Okay? You like that? Great. Every single stock you buy is going to go down. Because that's all they do. They go up, they go down, they go up, they go down, they go up. That's it. They don't come to the house and wash the dishes. They don't rake the yard. They don't trim the trees. They don't rake the leaves. They don't take the dog for a walk. They go up, they go down. That's it. That's all. Can you show CLSI? We already looked at CLSK. Okay, we looked at it earlier. Okay. There's right there. Can we copy trade? Absolutely. Okay, so D-Loop, what are you looking for? See the last 30 days for CLSK. Okay. Here's the bottom. It shoots up. Here's the top. What do you think's happening next? It's coming down. It does the same thing over and over again. Okay, it drops, finds the bottom. It shoots up, finds the top. Now it's coming down. If you really like it, wait for it to find a new bottom and turn around. I meant when looking at its monthly chart. Oh, XLE. Okay, Vigilante. The monthly chart for XLE. 30-day bottom. 30-day top. What the hell are you talking about? Okay, 30 days ago. It was at the 30-day bottom. Then it went higher. Today, it's at the 1 year high. It is at the high of the year. I have no idea what it is you want me to see because what you're asking me is the XLE 30-day chart. There it is. The 30-day bottom, the 30-day top. Not time for buying. Not for me anyway. You want to buy? You're on your own. What else you got? What do we have here? Oh, wow, all these questions. Oh, wow, all these questions. I missed all these questions. All right. Okay, D-Loop. Can you explain how you got 9%? Was the strike price? I have no idea what you're talking about. Oh, Vigilante? Hell no. Come on. Seriously? 2022 was 4 years ago. Why do I care what happened 4 years ago? What happened 4 years ago ain't going to do me a damn bit of good this week or next week. Okay? We're living in the present, which means where is the stock today? The stock today is at the high of the year. I don't care where it was 2022. I honestly don't. Okay? The sun rose in 1873. You think I really care? No. Is it going to rise tomorrow? Yeah. Is it going to rise the next day? Yeah. It's going to do the same thing over and over again. Okay. XLE is at the high of the year, this year, this month, this quarter, this week, however you want to look at it. It's at the high of the year now. I don't care about 2022. Because you're not buying in 2022. If I'm looking at buying, that would be tomorrow. Or that would be the next day. Or it would be next week. So where it was in 2022 doesn't mean jack, dick, diddly anything to me. Doesn't mean anything. I honestly don't care. And you can say whatever you want about it. You like it, you buy it. Okay? You're coming to my channel, asking me my opinion. I'm giving you my opinion. You don't like it? I don't know what to tell you. And I'm not going to look 6 years ago. 6 years ago is not going to do me any good today. Do you say only if you like it? in case it drops like riot scenario. Yeah, Remax. If you don't like it, don't buy it. All stocks go up, all stocks go down. Okay, we looked at sales. Okay, can we copy trade? Yes, you can. Amazing. Talk to you in the morning. Hey, Doc Corey, how you doing? Kim, will the option sell itself, or do you need to execute selling the option? No. Okay, see, the funny thing is, Camp Road, you got a choice. Okay, when you're selling an option, you can sell it at the market, which means I want it sold now, I don't care what the cost is. That's a market sale. An option, a limit order, is this is what I want, and I won't take any less. That never fail. Ooh. Nettie, Harley Davidson, HOG. Interesting. Take a look. Harley Davidson's been in business for over 100 years. 100 years. 1903, I believe, the first Harley Davidson. I think it was in 1903. All right. Harley Davidson, same thing. The top, the bottom, where is it? Down, up, down. What's going on here? Last 30 days. Check it out. 30-day top, 30-day bottom. Now she's going up. It's at 2054. Do I like Harley Davidson? Do I like Harley Davidson at this current price? If I do, is this something I want to buy and hold regardless of whether it goes up or goes down? Okay, D, look at Bitto in a second. Okay, so the 2054, the current price. The 2050 is going for 55 cents. That's more than 2% on Harley Davidson. And yes, I do own some Harley Davidson. Not the motorcycle, the stock. Now, I used to have a Harley Davidson motorcycle many years ago, but now I have a Gold Wing. What can I say? I'm getting older, and no Harley Davidsons have reverse. Okay. My Gold Wing does. Pull the lever, hit the button, and it backs up on its own. I love it. Anyway, Harley Davidson at 2050. Here we go. Harley Davidson at 2050. Here we go. By one covered call, Harley Davidson, 30 January, the 2050 call option. 56 is the profit, 1994 is the investment. What is the rate of return? Gotcha. What about PayPal? Okay, Vigilante, you do know PayPal doesn't have any dividends. See, it's a dividend investing channel where we look at dividend stocks, specifically dividend stocks that are consistently profitable. PayPal doesn't have dividends. Charlie, you missed mine. It's up above. I'm sorry, Charlie. Can you spit it out again? Okay, I'm getting ready to close up for the night, Charlie. So let me know what it is now. We'll take a look at it in a second. What time do you start streaming? You're on Pacific time. Yeah, I'm on the Eastern Seaboard. I'm in St. Petersburg, Florida. Yeah. So it's 12:30. It's past midnight here. So I'm getting ready to go to bed. I'm going to answer a few more questions. That's about it. So we're looking at Harley Davidson. What's the rate of return? 56 is the profit divided by the investment. 1994. That's 2.8%. 2.8% for 1 week for Harley Davidson. Well, do you like Harley Davidson? That's a good question. Do you like it? Do you want to buy it? Do you want to hold on to it? Okay. It's giving 2.8% for the week. Let's take a gander. Harley Davidson. Oh, there it is, right there. Buy one covered call, Harley Davidson. 3rd January, that's next Friday. The $20.50 call option. 56 the profit, 1994 is the investment, 2.8% for 1 week. If and only if you actually like Harley Davidson and willing to hold it through thick and thin. It goes up, it goes down, it goes up, it goes down. You like it, you hold on to it. They pay you a dividend every 90 days. All right, we got that saved. $2.8. Yay! Harley Davidson. D-Loop, Bitto. That's going to be the last one we do tonight, Bitto. Bitto, B-I-T-O. B-I-T-O. Okay. High, low, where was it? Is it down, up, down, up? What's going on here? Get a gap right here. Take a look at that. Here's the last 30 days. Down, up, down, up, down. It keeps going down. Me personally, I wouldn't do it. What program you using to look up stocks? Cassis, it's not a program. This is Charles Schwab's Think or Swim. It's Charles Schwab's trading platform. Not Charles Schwab's trading platform. It's Think or Swim's trading platform. Charles Schwab owns it. Sometimes the stock goes during dividends. Would you lose profits? Okay, one life you only lose profits if you sell for less than what you paid for it. Okay. Chip and Diane, what's going on? What time frame on the chart? The 1 year chart, the 90-day chart, the 30-day chart. Are you holding WU? No. Nope. Teo. Fred Mars, thank you. The bank will put a trade for me. What? Absolutely. You go to your investment section on your bank. They'll do it for you. Cable SMR doesn't have dividends. I'm well aware of that. I didn't say to buy it. I just said somebody asked me to look at it. I took a look at it. That's all. Okay, what you see up here is what you guys asked me to look at. Doesn't mean I'm doing it. What else do we got? Have a great night, you too. Jay Collins, I'm not looking at anymore. Dubai. What is the best thing to do to compound your investment over time? Consistency. That's it. Rosie, Iren. I-R-E-N. I-R-E-N. Looks like we're slowing down on Iren, Rosie. Take a look at this. Okay. 30-day bottom was 3 weeks ago. Shoots up, finds a 30-day high on Friday. Okay, you know what 30-day high means? Profit taking, stocks come down. Do you only sell call options on weekly? Absolutely. Why would I do anything else? Platinum Barber. Think of it this way. Okay. I'm a Gen Xer. I grew up in the 60s and 70s. If it ain't broke, don't fix it. If it's working just fine, leave it alone. What do you think of that idea? If it ain't broke, don't fix it. If it's working perfectly fine, don't touch it. That's it. How much can someone start with? My grandson's going to start with $50 and be able to follow. Okay, we're actually going to start a new channel for my 5-year-old grandson. He's going to do his once a week. Okay, every once a week, my grandson will come. We'll count all the change that we've collected throughout the week. And then we will invest using dividend capture strategy for those who don't have a lot of money. Okay, now my grandson's 5 years old. If he can do it, you can do it too. And we're going to videotape the whole thing live so you can see exactly how it goes. Franklin! The way you lose in options only if you sell for less. That sounds like something I would say. We West Coast a lot. You probably do. Thank you, Rosie. I own Ren at 28% return, but iRent isn't a dividend stock. Okay. Kevo, I have a cross between a dog and a cat. It's a dat. That's disturbing. Get it? That's disturbing. John, good companies don't fail in 2 weeks. I'm aware of that, but thank you there, Don. Don Polos. Yeah, he thinks that's funny. Fonzie Craft. We'll take a look at that next time. I'm done for the night. I'm just going to answer what questions we have left. Don, what's the dividend capture part of the strategy? It's not this strategy. It's a total different strategy. Okay, it's going to be a different website. It's going to be a different strategy, and it's not going to be taught here. The only thing taught here is this one. Now, for my 5-year-old grandson, it's dividend capturing because he's 5 and he doesn't have a lot of money. Now, for my 9-year-old daughter, it's dividend capturing 2.0, which involves the stock options. Okay, dividend capturing doesn't involve stock options. Uh-oh. Kevo, I taught my 9-month-old real strategy. Alrighty. Harry for good. Thank you, belated birthday. Thank you. You stayed up late tonight. Yep, I'm getting ready to be done for the day. Lloyd, Kevo. Tesla bots can take the dog for you and your girl to dinner. That'd be lovely. Adam, we looked at Mara earlier today. Savvy Chick. Bohemian. Good evening. Are your dividend taxes deductible? Savvy Chick Bohemian. The dividend taxes. Okay, you're talking about the taxes on the dividend income. All right. I'll listen closely here for a second, Savvy Chick. Depending on how you have your account set up. If it's in your own personal name, you are going to be taxed the absolute maximum tax there is. Unless you decide to opt out of the tax system, which is perfectly legal if you want to do that. Secondly, if you're trading your account in your company name, okay, LLC or C corporation, depending how you want to set it up, then you pay corporate taxes. And corporate taxes can be offset about profits and losses of the corporation. So if your corporation made a whole bunch of money and you're going to pay taxes, well, you can have a meeting with the corporate offices, which is you, by the way. The corporate offices can decide that, hey, the president of the corporation really needs to have a company car. Thus, the profits from your trading account in the corporation can offset the profits of the trading through the losses of the corporation. Okay, WK, you're getting 1 penny dividend. Good for you. Alrighty. That's it. That's every single question has been answered. So I am done for the night. You guys have a great day. And we'll see you all again tomorrow. Because tomorrow. WK, that's funny. Alright. We'll see you tomorrow. You're always a day away. The sun will come out tomorrow. Wipe away the cobwebs. And absolutely better than nothing. I'm agreeing with you. Bob Dunkey, I'm just getting ready to leave, brother. Sorry, you're a little late to the party.